to see you.
Good afternoon. It's good to see you guys too. It's been way too long.
Yeah. Are we good to go? Okay. And Bertha, you're
Hello.
ready. Okay. Welcome to the Calaveras County Finance Committee meeting. This is Tuesday, April 16th. And if you can join me for the Pledge of Allegiance. Oh, doggone. Well, that one. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I think we should just have them together. Yeah.
Now, is there a
Well, I
reason?
saw a flag over there, so you know. Yes.
Oh.
To your
We've
left,
been doing
interesting.
it wrong?
And then the state flag to your right or something? Oh, that's very cool. Nice to have a scoutmaster here, huh? All right, welcome everybody. So now's the time for public comments limited to 3 minutes per person. Do we have any public comments here? Seeing none, any online public comments?
No.
And I guess we'll raise the hand when you want to make a comment. Okay, so seeing none online. Good. Okay, so item number 2, approval of the minutes for the meeting of March 19th, 2024. The only comment that I want to make, Rebecca, are we going to we record the finance meeting? Should we put a link on there or no? Your call, just was wondering. Yeah, okay. Yeah, and then on the director's comments, I had said, blah, 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 and fee schedule wasn't that the late fee schedule, or did I want to see all fee schedules? All fee schedules. Okay. I'm good with them. Bertha, what about you?
No, I'm fine.
All right.
So it's, I'll approve with changes.
Oh, no, I don't think we
okay.
need any changes. I think everything's fine.
Okay.
Okay, so approval of the minutes for March 19th have been approved. We're going to move on to new business. Item 3A, report on the monthly financial reports for March 2024. And we have Jeff joining us online, I believe, to give us our report.
Yes, good afternoon, Director Cicada, Director Underhill. First off, I want to apologize for my extended absence. I've been away too long, but I am happy to be back and I'm looking forward to next month being there live and in person.
Nice.
Okay.
We look forward to seeing you.
Thank you. We do have a rather large agenda today. In addition to the monthly budget status reports, we have the 2 Chandler investment activity reports, an item regarding the extending the agreement with Richardson and Company. And then Kelly has 3 items, the Tyler implementation update, discussion direction of the district's customer assistance program or CAP enrollment and potential policy updates, and past due delinquencies. That's a pretty big agenda. So I'm going to look to your committee's direction to see how much time you really want to spend on the monthly financial reports. We can go into detail, or I'm going to take my direction from you.
I think for time, shall we each go directly to our questions if we have any? Is that okay? All right.
That works for me.
Bertha, you go.
Yes.
You want to go through and start with the first monthly report for March and go through any of your questions or comments?
Okay.
And refer to the page number.
Yeah, I was going to
Yeah.
say that also. Yeah, please tell us the page number.
Well, no, he's not gonna talk at the moment. You go ahead and just go directly into your questions regarding the report, just to save time so we can spend a little bit more time in the other areas.
Okay. I specifically I don't have a specific question. I just want to.
Make your comments or whatever. Yeah, just tell us what page to refer to. Go ahead.
Okay, Jeffrey, so, you're talking about what page? Or 3A?
Yeah, that's where it starts. So if you
Mhm.
have any questions or comments, you just tell us where you want us to look. If you want, I'll go first. It's
Yeah,
up to
okay,
you.
go
Okay.
ahead.
There we go.
All right, so here we go. So I'm gonna start on page 2. And I'm kind of curious. I am looking at item number, well, under water sewer fees, 44300, the concept approval fees. What are those?
So concept approval is the engineering process that we have for approving or considering new applications for
Okay.
development, unless I'm off base there. It's an engineering.
That's what I thought, and so I made a
Yes.
comment. Do you charge the customer for that
do.
fee? You do, okay, so I could
Yes.
look to whatever revenue account if needed. And because I was gonna say, well, looking at the expenses in the previous years, how come we didn't budget more? But it's a wash.
We don't,
If we- if
it's
we-
kind of like new connections. We don't usually budget
Okay,
for that. Because sometimes we have a lot of activity there, sometimes we don't.
okay.
But sorry, you were on page
On
2. I
page
just want to make sure I'm
2,
referring to the right
Water
thing.
sewer fees, yeah, concept approval fees, 48100. And we spent $3,030, but you should be getting all that back for fees.
Actually, that's our revenue coming in. When you're looking
Yeah,
at.
this is the revenue.
Oh, gotcha. My bad.
Yes.
But there's an expense side somewhere over there. And is it just the expenses are included in just the usual line item with other new accounts? That
Michael,
don't even
may I?
answer that.
Yeah, it will be
Yeah.
for a specific project, and it should be concept review.
Mhm.
But go ahead, Jeff.
Okay,
And
I'm
that's
good.
basically
Okay.
staff time. That's
Yeah.
engineering staff time. So we track our time and we charge them accordingly to recover district costs.
Right, so it's basically if a developer comes to us with an application or a proposal that isn't yet like a plan submittal, that's the first stage in the engineering process is concept review. And we do recover, so we'll establish a
Yeah.
project number at that point and we charge the developer for
Yeah.
those costs.
Okay, so that's what I was kind of getting at. Is this really just a wash and that's why we didn't budget anything?
Yeah.
Okay, and I have a question.
Fluctuates.
Does Metamont fit in here at all?
Yeah, it's interesting.
Yes,
Um, We have not yet been charging them. I think we are tracking. We're working with them on that, but we haven't. What we've told them is if they elect at this point to go further with pursuing a master meter or a conversion to a master meter, then we do need to start recovering our costs on that front. But as of yet, we have not.
Because that's a pretty healthy amount that we're talking about.
Well, the concept review costs won't be significant for them. We've already
Oh.
done a majority of the work. But we do, if they want to proceed
Right.
with that.
Okay, then
Project.
maybe I'm thinking in terms of further down. Okay.
Yeah, so the actual implementation would be costly for them, but as far as like staff time on concept review, at this point, it wouldn't be a huge
Mhm.
additional expense.
Conceptually and in reality, it's there, you know.
That's why that one is a
Yeah,
bit of an
uh-huh.
oddball, right?
Okay, yeah, I'm all right.
So, and I just have a little bit of clarity in that same area. You know, we're looking at the install water meter. And then below that, for that same number, it calls it meter rentals. It's just the meter that goes on the customer's property. They don't own it. It just is kind of weird that it seems like it's called one thing and then called something
Meter
different.
rental is a different thing.
Okay, what is
Yeah,
that?
meter rental is like a hydrant meter, right? And for construction, they're temporary, they're not
Okay.
permanent. They're, meter rental is a different thing.
Okay. That's why it's a little bit low, just based on no construction
Mhm.
pretty much going on. Okay. And thank you for putting the third party expense and stuff in here. I know it's on another spot too at the expenses. Remember, I asked to have the income and the expense put together, so thank you.
Did it
That's
just
nice.
for you.
Thank you, appreciate it. All righty. I'm looking at page 3, and Jeff, this is probably a question for you, but maybe you got it, Michael. On the, for item number 48130, the rental revenue, it shows that it's really low, and I understand why, because it's a balance sheet item. But I'm wondering how often, do you do those journal entries to pull it out of as income and then put it against the liability?
That's
The
done at
count, the
year
accounts
end.
receivable, I imagine it would be, right?
Yes, and that's done at year end.
Okay,
When we go through the year end process, it's quite extensive. In fact, just as a footnote here, we, Catherine was working with the auditors and coming up with a really extensive and detailed Excel spreadsheet to track our GASB 87. And obviously with Catherine gone, we turned to our auditors, and the auditors actually fine-tuned theirs, and they have a spreadsheet that they use with a number of their clients. And we're going to get training on that later this week directly from the auditors. So myself, Patty, Kylie, and Michael will all get trained on this new GASB 87 spreadsheet. So as we get through year end, we'll all be trained in it and understand it. But all the activity happens at year end.
but it's all part of us skewing this report a little bit. If we're supposed to be at 75%, we see 11, it's for that reason.
Yes, exactly.
Okay,
Yes.
so annually,
Yes.
I'm looking at my notes on the next page, page 4.
Excuse me, before we leave that,
Mhm.
I did see something and then I lost it on the standby fee.
That standby fee is sort of like property taxes. We get 2 installments for that, in one in, the December taxes, the other one in April. And the numbers you see there represent close to 54%. When you look at property tax, the same thing. We get about 54% of our property tax revenue, 54, 55 in the first installment. And then the second installment that we should be getting in May will cover the rest of it. Same with standby fees. It's based in 2 installments. So we'll probably we'll be close to budget once we get the second installment.
Okay.
And then so I'm on page 4 and I'm looking at the sales and whatnot for the operating. And I know that we have for the previous fiscal years, it's a full year, and we have the year-to-date amount for the current year. And I'm wondering, and you don't have to do it this time, but maybe next time or whatever. I'm wondering what I want to see if we can note, because we have the rate increase. If you could compare fiscal year 22 and 23 at the period ending date, like it would be March, instead of the year to date, just if you guys could look at it and then tell me, oh yeah, we're X amount more. I'm still trying to find a way to help me stay with the increases, and I'm not sure if that will help you or not. I just kind of was wondering, you know what I mean? And again, we don't have to do anything today. You don't have to do anything in the report. If you folks have a minute and take a look, just kind of, because I would assume it would be more than last period, as long as all the bi-monthly billing is in step and whatnot. I mean, you have to look at the AR. Well, that still sells prior, whether you collect it or not. I'm just,
Because,
you know what I'm
you
saying?
know,
We sent
Yeah.
You do?
the finance committee reports from the last 2 Aprils. I sent that email to Rebecca.
Oh, you
sent
did?
it. So we can take a look at that and see if that's something you want us to.
I'll look
or
at it.
I think that's where we can look at year over year
Yeah.
and see.
Just
that
kind of
comparison.
curious as
Sure.
to how the rate increase is moving along
Because
with our
I,
projections, I
yeah.
guess.
because I had talked to Kelly and I was speaking rate increase from a different perspective. I wanted to see what the impact of the rate increase was with our delinquency,
Okay.
Mhm.
Yeah,
the
sorry.
percentage.
Yeah, I haven't looked at my emails because I just got here because I don't get them, but anyway, I'll look at them. We could do an offline,
Mhm.
whatever.
Sure.
But does that kind of make sense? Does it seem like it's something that you guys look at, or is it just me?
No, that does make sense. And honestly, we've had some internal discussions on the formatting of this report. And in due time, once we get, it may not happen by next month to change the formatting, but we can footnote the dollar amounts. But we really want to take a look at the format of this, gain insight from, our discussions with your committee, and we're doing that now, to come up with a different format. Because as you say, it's one thing to compare, because March, you're 3/4 of the way through the year, it's 75%. But how does that compare to last year at this time versus the total annual revenues generated last year? So we're going to be incorporating that because I think it's a really good comparison.
Okay. I mean, I'm looking at it based on the rate increase. When I look at this report normally without that rate increase, I'd see, we've collected, the 4 million in 23 and we're at 2.8. It just helps me get an idea of how much further we have to go. But I'm just really trying to help myself find some way to look at that rate increase portion to see where we're at. And I'm
Understood.
not sure if I have a
Tell you,
solution.
just looking at the finance committee report from last year, and I'm hesitant
Yeah, we don't have to talk about it right now, Michael.
to speak up right now because I'm not 100% sure this is apples to apples. But if we look at where we were year to date on sales and charges, last year 11 million, about 11.2 million, and this year we're about 13 million. So that is probably the rate increase that we're seeing right there.
Perfect. And it'd be kind of cool to see what percent based on what, because we used a percentage of income. So just
Should
kind of
be
see where
about,
we're at,
well,
22% or whatever it
yeah,
was.
but this is water and sewer, so it's
Yeah.
blended. We'd have to pull
Yeah,
that out.
but that might be a target that we could look at or something we could look at to see where, I don't know.
Sure.
That's what my reason for the commenting was, to help me see where we're at. And I also had mentioned, I'm on page 13. And that was, I see that operating the third party, that looks really nice too, so thank you. And the miscellaneous account, I had made a comment that under miscellaneous operating account, we have so many accounts that I think could be a little bit more, like maybe renaming the miscellaneous account. Michael, we kind of talked about a little bit. Just there seems like there's a lot of expenses for regulation and stuff like that. And as somebody who's looking at accounts, when I see miscellaneous, it makes you wonder, well, what's in there, right? I mean, you can obviously see it when we see the detail, but when it's a condensed format and you see a lot of money in miscellaneous, you kind of want to question it. So maybe that's something to consider for next fiscal year.
Are you looking at the expenditure side or the revenue side?
The expenditure side, I mean,
Okay.
both would be good. I mean, they should tie in together, if there's an expense side and a revenue side, but yeah, I just think, I just don't think any of these, we should have anything miscellaneous. Obviously, there's going to be some things that can fit in there.
One of the things, well, you can speak to that. If they would detail it,
Well,
and would have to be detailed on a monthly basis.
well, there is,
Is it what's that going to do to you as far as the workload is concerned?
well, they do have the detail in here
Mhm.
for it. You just got to go to another report.
Yeah.
That's how I knew that there was things like, state fees, the New Hogan Dam fees, and instead of that being under miscellaneous, I think you should rename from, like, not move everything, just rename from miscellaneous to regulatory and insurance or something. I don't know. That would be up to you guys. Just get rid of the miscellaneous and leave miscellaneous for things that are more like not regular items, perhaps, there may be one-time charges, that kind of thing.
If you
Yeah.
go to
And because
page
we're looking
7
at-
of the report,
Pardon me?
if you go to page 7 of the report
Thank you.
on the district operating expense detail,
Mhm.
it's at the top of the page, it shows all the detailed accounts that fall under miscellaneous operating expense. So what we can do is take a look at that, work with our auditors, because now's the time to do so with our Tyler implementation, our chart of accounts and such, to see if there's a better way for separating out these costs or identifying what they are. So we can look at that.
Yeah, and I just wanted to mention too, you're working on next year's budget, so you wouldn't want to make any changes until then. But, discuss it amongst you and see how you guys feel about it. But when it's condensed, I see miscellaneous, for, a lot of money. I start looking, and when you look at the items in there, to me, it seems like they could have a placeholder
Yeah.
better identified, but. Okay, that was all my comments. Other than that, looks good, you guys. Thank you. Bertha, any other
No,
questions?
I'm good.
Okay, Jeff, you have any more comments? You want me to move on to 3B?
You can move on to 3B.
All right. Oh, wait, is there any public comment online for the monthly financial, the budget to actual? Anybody on there?
Not at this time.
Okay, thank you. All right, let's move on to item 3B, report of the fiscal year 23-24 second quarter investment activities.
And actually, your 3B and 3C are going to be concurrent because
Okay,
what we have here is the two reports, actually. The one is from 2023. The other is from December 31st. Actually, between January 1 and March 31st, 2024. The key here is what we're looking at is changes in the balance sheet. Let's start with September 30th, 2023. We had about $58.8 million in total cash and investments. Remember, a significant portion of that is with our loan proceeds, and that's identified under Chandler Asset Management water loan proceeds of a little over 19.4 million and the sewer loan proceeds of 7.3 million.
what page are you on? What page are you on, Jeff?
I'm on page 1 of 2.
1 of 2.
Okay,
Of the second quarter investments.
gotcha, I'm there.
Okay. So that's significant. Now we're talking about almost $27 million in proceeds. Remember, those proceeds can only be used for the projects that were identified in the loan documents, and we're working very closely on that. We actually showed some increases in both of those funds, basically due to investment activity, investment returns. So that's something that we monitor, and in actuality, I'll come back to that in a moment. I'll just go through the report first. The biggest changes we had is in our LAIF category. LAIF went down 1.9 million, but one of the things to consider is, one, we don't have property tax money until January to help us with our ongoing expenses, but we also paid out some expenses on some CIP projects. And that you can see on page number 2. We had 1.37 million go to CIP projects for KW Emerson, Mazingo projects for 423,000. So you see a lot of CIP costs going out the door as making up part of the significant changes in our cash balances.
Okay, so that's not investment loss, just to clarify.
It's just
No,
expenses.
it is not.
Right.
Okay.
It's
I-
cash going out the door for expenditures.
Have we changed our policy on LAIF? Because remember, we decided that we were going to be using Chandler.
It's a balance. Yeah, go ahead, Jeff.
Uh-huh.
Yes. The difference between LAIF is we can access our money same day if depending upon the dollar amount. It's more liquid. Chandler invests in some short-term, medium, and long-term investments. If we have to get that money out of Chandler, sometimes we'll pay a penalty for selling an investment before its maturity, especially when we're looking at some of the investments that were purchased over time. So LAIF is kind of like our bank, our cash flow, our liquid. Chandler is more of a medium to long-term investment strategy.
Okay. So we haven't changed how we're handling it or LAIF.
No, we have not.
Okay.
All right. Is that it?
That's all I have on the first quarter's report. If we go to the next, attached to
see
that
if-
is portfolio summaries.
Yeah, let me see if there's any questions so far online. Anybody online?
No question.
No public comment. Thank you. All right, Jeff, go ahead and continue, or are we moving on to a different item number?
Actually, we're going on to 3C, which is the next
Okay.
quarter report. And you can see here that there really hasn't been a change in a lot of cash flow, because during that quarter, we also got even though we have dollars going out, that's where we got our property tax revenue that helps bolster our cash situation, our cash point. So in looking at the change here, a lot of those changes are basically investment returns. We got a significant amount for the water and sewer loan proceeds. And we did we did have a decrease in our Umpqua cash, but that's because we have bills to pay. And that's where our bills come out of, is our Umpqua bank general account. We ended with $57.9 million of cash and investments. And if you go to page 2, you can see there were several large disbursements. We had debt service of a little over $2 million. Generally, our larger debt service, our loans are paid in September and in February, early March, depending upon the due dates. So that's where you see a significant outflow of cash. We also had some CIP project payments, TNS Construction for $1.1 million, and KW Emerson for $850,000, and Mozingo for $543,000.
Okay. Any questions or comments, Bertha?
No, oh, wait a second. What did you say for Mozingo?
$543,000.
Mazingo's the contractor working on.
Right. No. I know him. Well, I know the company, but I'm looking at page 2, right?
2, yeah.
And
Yes.
Mozingo was only 426.
Go to 3C, maybe. We moved on to 3C. Right? Yeah. We're on the third quarter one. It's after the Chandler report.
Okay, sorry.
Got it?
All right, got it.
Generally,
any
we
other-
only do one quarter at a time, but this is kind of a catch-up where we
Okay.
can
Right.
supply you with both 2 quarters worth of investment activities.
Okay, any other comments, Bertha?
Mm-mm.
Any public comment online for item 3C?
No public comment.
Okay, great. Okay, if there's nothing else, Jeff, we'll move on.
Yes, ma'am.
Okay, item 3D, discussion direction regarding extending the agreement with Richardson and Company for auditing services for the fiscal year ending June 30th, 2024. That's you again,
Yes.
I think, Jeff.
It is. What we're looking at here, excuse me, just 1 second, please.
Mhm.
What we're looking at here is our agreement with Richardson and Company has come to an end. And what we have as staff talked about is how to be able to manage our upcoming audit for fiscal year 23-24, which in reality, we start that in June before year end has come, before the fiscal year has closed. Generally, at this point, we would have secured or issued a request for proposals from different accounting firms and selected our accountant for next year. But due to circumstances beyond our control and all the things that have gone on, including my absence for a number of months, we basically came up with a plan B, which is, in talking to Brian Nash, our lead auditor, is to extend their Richardson Company's agreement for one more fiscal year. And then next year go out with a request for a proposal, soliciting requests from multiple accounting firms.
Yeah.
At this particular point in time, we've looked at options. Staff believes that the best way to facilitate a smooth audit for this current fiscal year, especially including the fact that we have 2 new accountants on board, is to extend the existing agreement with Richardson and Company at a higher rate, which is about a 5.62% increase, where the base auditing agreement will be $37,600. The base agreement for this year is $35,600, so a $2,000 increase from their base agreement. Now, this base agreement, our costs may come in over that because of the number of closing journals and adjusting journal entries at the end of the year. We've worked very hard to be able to minimize those, and we're moving in the right direction. But at this particular point in time, staff is requesting your input on extending the agreement for one more year, based on the schedule that is page 2 of this item. And if you could go to show this report, I mean my staff report on this plus the costs up on the screen, please. As you can see on this particular page, Richardson Company does our basic audit financial statements. We do single audits based on grant activity, and this is because of the federal government. We have to submit these to the federal government. And we also have to report to the state controller's office and load up our financial numbers onto their website, submit them to them. And then so that is what we have off to the right column. The state controllers for the district is $800, but we also have to report out on our public finance authority, then that's an additional $600. And I'm available to answer any questions at this time.
So, I'm in favor of, extending it another year with everything going on with, Tyler and new staff. I think it's important. But a couple of questions. Well, first a comment. When I see
Yes.
these agenda item sheets, this is just And it says at the bottom of it is financial considerations, none at this time. But in theory, if we approve this, it would. I would change that to financial considerations. It would be a $2,000 increase, if approved or something like that. It's kind of like right
Sure.
there. It's just a little weird thing. But anyhow, what did we pay in 2022? That would have been 21, 22, I think fiscal year, because the actual fees 23 would have been 22, 23, right? What was the
Yeah,
cost in 2022?
The fiscal year 21, 22 costs, which was associated with the audited financial statements ending June 30th, 2021, we paid a total of $39,911.
But you said
39?
2021, you mean ending in 22, would have been fiscal year 21, 22. I'm looking at on your report here, the actual fees were 23. That would have been fiscal year 22, 23, right? At 35.6.
Okay, what you're looking at here is the fees associated with fiscal year 23.
Right, that's calendar year 22 and 23. And we call that our fiscal year ending 23. So what was our cost for these services for calendar year 21, 22 ending fiscal year 22?
Let me go over some numbers that I have here.
You know what? That's okay. You can let me. I'm just trying
because
to
it's
look
a
at the
little
trend
bit-
here.
Yeah, it's a little bit.
Because I think the
It's a little
number
bit
you gave
confusing
me.
because when we look at our costs in fiscal year 23, 24, that is for the audit for the fiscal year ending June
Yeah.
30th, 2023. So our
Okay, so
costs are a year behind.
Yeah, and that's fine and dandy. So what did we
Yeah.
pay in June of 2022 for that fiscal year? And so I guess it was 39,000. I see what you're
Yes.
going, where you're going with
Yeah.
this. So this is still, I'm looking at what the cost was last year, the previous year, and then we're anticipating this next year coming up. So it was 39,000, you said, and change?
Yes, 39,000 and change.
And why was that more, I wonder?
Part of it is because of the additional work we had to do with GASB 87 and all the
there was
adjusting
some new
journal
stuff.
entries that the auditors had to perform to finalize our work, because that was also around the transition time of moving
Rebecca,
from
maybe?
a 101, Fund 101,
Yeah.
to splitting that up. And there was a lot of adjusting journals at that time that we had to go back and do for 2 years. And so that is additional work above and beyond their agreement, their base agreement.
Well, it's nice to see that it's less.
Yes, and we're coming
That's a
down.
plus.
And actually, year to date right now, for the audited financial statements that they presented to you, we're at about 28,000. I expect the final billings to come in. So it's trending down. The amount of adjusting journals has come down significantly over
Good.
time.
Good. The other thing, how long have they been doing our audits?
Yeah,
I know we
that's-
can continue
it's
to use the same company
quite-
as long as
Quite
there's
a while.
as long as there's a different lead,
Yeah.
every once
Yeah.
in a while. So how long have we been using them?
We started with the audit ending June 30th, 2016.
Okay. All right. Well, I'm in favor,
Okay.
Bertha.
No, makes sense to
sense.
me. I mean, let's keep everything.
No, there's still a lot
Yeah,
going on.
yeah.
Okay.
Yeah. The question that I had is that when we're finalizing our costs, and I think what you're telling me, or what I've heard from you at end of budget in the years past, if we have a bill that has to be paid and we've already totaled that particular account, when that bill comes in, we have to make a budget adjustment, and that budget adjustment is more money that we have to pay our auditor. Is that what?
Actually, my theory behind individual line items, if the audit comes in over budget of what we budgeted, I don't change the budget. I look for savings elsewhere. But in reality, let me pull up
Well, the
an
bottom
item
line is
here.
there's some things you don't want to change. Go ahead and show
Right.
that line item being, under budgeted. So next year you can catch it and maybe do a better budget.
And we may.
But overall,
Right.
you're
And I
looking
think
at
that's
where you.
usually what we'll do, so that we have that
Yeah.
record, but we also, we can budget for a little bit more than what the actual contract value is in anticipation of some of these additional charges that we know are likely.
Sure.
Hopefully not.
The only-
much, but-
The only time I could see something like that being an issue is I'm talking about the rate study now, the increase. And so, if we planned our budget on, these 10 items, let's say, and then we have an extra item come in that we didn't plan on, then what happens? You know what I mean? So I think overall in the operating, you're still okay, but just being mindful of any potential items that, were, let's say that we had project A in operating, we're going to buy item A, and that was part of the price increase. But then we don't get that one, but we decide, let's do this over here instead. How does that affect our increase? So just being mindful of those types of changes on the line item accounts, Jeff, I think would be important. And if you
Yes.
do them, be very clear and track what we're doing, right?
And we do
Maybe.
that. And I just went back to, I'm looking at the budgeted amount for this fiscal year, 23-24 for audits. The total budget was 41,600. Of that, 40,400 was for Richardson. And then we also pay CalPERS for our GASB 68 audit work that they do, and that's 1,200. So we do track it by items. So in reality, what we've been looking at for Richardson for the dollars, because we budget a little bit knowing
Yeah.
a little bit more, knowing that we'll have these audit adjustments at the year end. We're coming in under budget, even though
Good.
Oh, okay.
Good.
Well,
Yeah, and that's fine. I'm just trying to get some examples. I mean, the bottom line is, do we come over or under budget? But I think it's important with the increase that we watch certain amount of those line items. So anyhow,
Well,
that's,
one of the things that we might think about is if we know that something's going to be coming in after we do our budget, or if we can be ready, no, how do I want to say this? Make provisions for a big item that is not being billed in time for our budget or our close. Can we do something like that so we don't have to make an adjustment every time?
well, most of the time you guys do a good job with making the estimated budget. I mean, because they've done their history, it's going to cost this much, blah, blah, blah. And those times that I think go over budget or under is either they had to get something that wasn't budgeted for at all. So they do that, right? I mean, you guys already have those provisions the way I see it.
And one of the things as a reminder, I don't know if when we do the budget, remember the green sheets that we included that has the detail for each account? Mm-hmm. We look at each, in this case, auditing and accounting. It's, like I said, we pay Richardson and we also have to pay CalPERS. So when we prepare the budget, we go back to the prior years and look at the costs we had for each of those items. So we track it, pretty detailed tracking that goes into, like when we're looking at professional services, we'll look at how much we pay for Data Pros, how much we pay for Tyler. We pay for an OPEB for our actuary. So we do look at these items on a detailed basis. Sometimes something comes up, just as you had mentioned, is it's unanticipated costs. Well, if it's a one-time event, I'm not too worried about it, but if it's an ongoing additional cost each year, we will reflect that in the next year's budget to account for that.
But I think, in my opinion, at least what's really important to me and my constituents is that we're watching that rate increase and how our spending habits tie into that. So just mindful. That didn't have to do with the audit, but Okay. So any other questions, Bertha?
No,
Jeff, you all good? Any other comments?
I just would like some direction from your finance committee to take it to the full board at next Wednesday's board meeting.
yeah, that's fine.
Yeah, I'm okay taking it to the full
Uh-huh.
board. And then do we have any online public comment?
Not at this time.
Okay. All right. So yes, go ahead and move forward and bring it to the board meeting.
Thank you.
Mhm. Since I have you on here before you go, well, actually, Michael can answer this too. I'm just wondering, when are we going to start looking at the budget?
Well, I was going to address that in my
Comments.
director comments.
Perfect. We'll do that. Let's move on.
Okay.
All right. So thank you, everybody, for that. Let's move on to item 3E, Tyler implementation update. Go, Kelly. There's no paperwork. That's what the asterisk.
Good
are. Thank
afternoon,
you.
right. No paper in this, just wanted to provide a simple update on where admin services and specifically finance is on our project implementation for Tyler Technologies. As we've reported in the past, because we've been operating in two separate systems, utility billing has been in Tyler for some time now, but finance and our core financials and specifically our GL has been functioning out of Springbrook. And we find that obviously this is very difficult just from managing expenses and revenues as they relate to anything having to do with the GL side, but also impacts from the front end operation and utility billing and how that affects our activity in financials. So we have kicked off the implementation with Tyler. We actually just received word today that we have completed our stage 1 requirements for a part of the implementation. So just to provide some insight on that, stage 1.
How many stages are there?
There,
Where are we at, really?
there are a couple of stages.
A few, so maybe 3.
Right. There's about, from what I understand, there can be up to 7 stages.
Okay.
That's a number that I remember.
Yeah, some stages move faster
Lucky
than
number
others.
7.
Yes. So some stages move faster than others, but stage 1 is complete, and that involved our preliminary project manager with Tyler, who kind of got us up and running. We went live with our project SharePoint. It's kind of a project management platform with Tyler, and we have had several meetings stemming from late March. So first one being a scope alignment meeting where we kind of get a preliminary overview of what our implementation could look like. And then we had a data prerequisite meeting where we met with the gentleman from Tyler who's going to be taking a look at our data that we send over. And then we had a final training introduction meeting where we were speaking with representatives about through the implementation process, the training that's involved and what that entails. Part of phase 1 also includes providing dates when internal staff will not be available. So it's kind of scoping out a timeline per se, a realistic timeline for CCWD staff to work with our Tyler implementation folks. And then also providing key calendars such as payroll, and again, those blackout dates so that we can make sure Tyler has some preliminary documentation and we can plan out the actual stages of the implementation appropriately and feasibly so that it's achievable. They don't want to move too quickly or draw it out longer than it needs to be because there are some critical elements to the implementation that involve data transfers that need to happen on a specific date. And so when we pull reports, for example, of data out of our core financial operation in Springbrook, we will also pull SQL Server data from that, and they need to match as closely as possible. So you don't want to pull reports from one day and then wait a week and pull data because you're going to have a week's worth of data that's not included. So we need to, timing is of the essence as you move forward through the steps. And so
You mentioned payroll,
Mhm.
and payroll for employees are all calendar year with end of year requirements for IRS. But yet we're on a fiscal year and we're looking at potentially moving our payroll to all Tyler, right?
Correct.
Okay,
So
so
from
Somebody's
ADP.
made the plan that that'll happen not before January 1.
So
Because otherwise, if you do it before then or after then, you're gonna have your old company having to do W-2s and everything associated with it. And I don't know if they do all the quarterlies or not. And then another company doing the other. And just a note,
right.
smooth transition is January 1 for payroll.
Right. So we've actually been assigned as of today a implementation project manager. So that takes us into stage 2 of the implementation where we start having conversations about our current state, how things look now within Springbrook, and then how we're connected in as far as payroll goes, HR and personnel management, and then utility billing side, how everything communicates. So we'll start to look at current state and then we'll start to plan out for future state. What do we want it to look like? What are Tyler's capabilities? What are we looking to achieve? So we'll start having those analysis conversations here within the coming weeks, now that we have an implementation project manager. As we do that as well, the timeline will start to develop as far as typically what they had explained. Your core financial implementation will happen first. You'll get everything up and running as far as your GL, your accounts payable, your AR, any kind of project accounting that you have, purchasing, those types of things. And then the final part will be the HR and payroll aspect of it.
Well, I'm just gonna tell you guys, and you guys just keep in the back of your head, you can direct traffic and I'm sure
Right.
Jeff is probably on board and any accountant person would know it's smoother doing it on calendar years in
Mhm.
these cases. And when you don't do it, then you're gonna have employees coming to you, they're getting 2, maybe they don't know they're getting 2, they get their 1 from us and they do their taxes, and next thing you know, they have, I'm just sharing with you that
Right.
as somebody, please keep that in mind because you'll be glad you guys all thought about it.
Right. Well, no, I appreciate that. And those are the conversations that we're having as far as timeline is concerned and making sure that it makes sense. But along with the process and the timeline includes evaluating the way that we're doing things now.
When do you expect to have Tyler fully up and running?
So
Have that
preliminarily, very preliminarily, and I
The goal,
hesitate to,
the
yeah.
wish list.
The goal is to have everything running by January 1st, 2025.
Nice.
So I think that gives us enough of a reasonable timeline. And again, taking into account the fact that we do have new staff. We have budget that we're going through. We have an audit coming up as well. And all of these things are, major, take a lot of work
So-
out of staff and finance. So
If you go to Tyler for payroll, are they gonna run payroll just like ADP or those other ones do? They're gonna be running all this?
right. So Tyler
we would-
payroll will take over for ADP. So we will no longer be using ADP.
So are we getting all of our eggs in one basket with Tyler? And is that a good thing? I'm just throwing that out there.
I mean, that
You
was
guys
part of
talk about
that
it,
was
I'm
one of the
sure, but
reasons to go to Tyler was a more integrated, to have more integrated functionality. And obviously we've had some frustrating issues with
Yeah.
ADP lately. So
yeah, that's what I
I
heard.
think, HR in particular is very much looking forward to this. transition.
Well, I guess, and and I could be wrong, but hearing about how Tyler and Springbrook, how some of these things work. This is my opinion, that's all. I've never used either of those. It seems like once you get involved, it's like it's like they have more control than you do. And I'm wondering if, and that's what I mean by our eggs in one basket. Is that a healthy thing to do? I don't know. To me, I like the streamline. That sounds like great. Everything's integrated. That all sounds good. But in 2 years from now, once we're all used to it, they're going to say, you've been paying 20,000, but now we're going to charge you 60,000 because of, and we have no choices there. You know what I mean? Anyhow, that's just my opinion, and I have no basis for it other than I would worry about that.
Well, and I think you're looking at two different types of platforms as well.
Okay.
Streamline is more web-based and may have a little bit more leniency as far as what we're able to do internally. Whereas a lot of these software as a service companies now are operating on the cloud, and it's their cloud. They say it's our cloud. I mean, it is. It's our data, but it's their platform and we're paying for it. But there does seem to be a little bit more there. You used to be able to host a lot of these on premise. We would maintain the system. We could manipulate it. It was on our server. Now it's not managed on premise. It's managed in the cloud. And so you're a little bit more restricted as an end user or client to just go in and make the changes that you
Is
need
that a
to.
good thing? I don't know.
Mixed
Well,
feelings.
I mean,
But
I would
I
say
think a lot of agencies have mixed feelings
Yeah,
about that.
just because, one is internet, what if? There's a lot of what ifs, I know, and I'm sure you guys have all thought about it.
Right, but the whole idea is, and even more so, in going through an implementation process, knowing that we're hosted and it's cloud-based puts so much more emphasis on the implementation itself and really truly making sure that you have all the key players involved internally to be able to say, yes, this is how we do this now, but this is what we want it to look like, and build it as a part of the implementation process so that you get an end product that fits more of what you're looking for. Unfortunately, sometimes I think, especially with public agencies, unfortunately, we all have our normal day-to-day that we're having to do on top of implementations. We don't have a separate implementation team that's designated to this. So it's a constant juggle to make sure that you're implementing this correctly and getting your day-to-day done.
Well, you have to get it that the end users have to be part of that implementation.
Absolutely. And so I think it was pretty good. I kind of laughed about it afterwards because I've gone through several implementations with Tyler already. And one of the comments from our initial stage 1 project manager was, "Oh my goodness, I've never seen so many people on one call
About
before."
our staff being
Yeah,
on there. Well,
about how many people
you
we
learned your
had.
lesson.
And I kind of laughed to myself and thought, oh yeah, this is not going to
Yeah.
happen again. We want to
Exactly.
make sure all the key
Because-
players
yeah.
here
Yep.
are included. And then as we go through the implementation, if we're focusing on certain areas, we can bring in those folks that are specific to that area. But ultimately, throughout the whole project, too many is not enough, in my opinion.
Yeah.
Keep everybody
Well,
up
every
to
end
speed
user should
Well,
have
on where we
it.
are,
Yeah.
because
Go
it's a
ahead,
big
Brenda.
undertaking.
Yeah, I want to make sure that, at every stage, you're thinking about what could happen.
Right.
What,
Well,
what if something doesn't gel, that is the way you have to implement in order,
Right.
in order to be successful.
But
you
I
have
think
to anticipate.
because of what we've gone through these last few years, I'm sure
Mhm.
everybody has learned that.
I think
And
we're
I'm
kind of on hyper alert.
Hoping that going
But,
forward.
and I wouldn't call it hyper alert. I
Oh,
I
not
would
at all.
just say caution.
Oh,
That's-
absolutely.
Yeah.
And really, you guys do your end thing, but they should be guiding you on the proper way to build it. Now, if they're not accountants, they may not know that. And maybe that happened when we got started, because you never should have, in my opinion, done it the way we did it. It
Right.
should have been infrastructure, which is your GL, and everything builds on that. But here nor there. The good thing is you guys are working together and got all the end users involved when needed.
Correct.
And I just worry about the cost, in 3 years, everything's going smooth, and now we're, man, because it's all
How are costs?
terrible. Haven't you
specify?
looked at your stuff?
Huh?
I'm sorry, that wasn't very nice. They're really high. I mean, there's
Well,
a thing in
no,
there.
but, I mean, it's X number of dollars and then next month it could be something else. What kind of, guarantee do we have?
No, you lock into a contract as far as software as a
Mhm.
service fees are concerned. And we're in a 5-year contract, so those don't change unless you add some sort of new module to the
Mhm.
mix. What fluctuates for us right now are the fees associated with convenience fee, payment processing. That's what fluctuates. But going through an implementation, you do have standalone implementation fees that are designated to the one-time fees
Yeah.
that are specific to the implementation itself. And then you have an annual contractual obligation to use the software. So
I'd like to know at some point, when this is all said and done, obviously I'd like to know the full cost. It's like, I want to know, but you don't want to know kind of a thing. But when we're operating and everything's going smoothly, we got all of our payroll and everything, I'm wondering what that cost is per each of our customer. I'm not saying it's their cost, but we have 13,000 customers, doing the math on that, because we use that for everything. I mean, that's our core, on top of some other good things like what Damon has and stuff like that, But I'm just kind of curious when it's all said and done, even our payroll, what is our payroll costing us, per employee? But that's several years down the road, I would imagine. Maybe I won't even be here.
So that is just an update on where we are with the implementation. And as we make some progress, I will continue to come and report to Finance Committee on our progress and provide updates.
Well, I like the goal of January 1.
Yes.
And your payroll is done monthly, right? The end of the month?
Our payroll is semi-monthly.
Right.
So we.
Oh, semi-monthly. Okay.
Semi-monthly, yes.
You have
So-
till the middle of the month then. For
So-
payroll.
So that
Okay.
is a part of the process though, is
Yeah.
looking at that calendar and timing.
Okay. well, very
And you
cool.
have all the accessibility you need. I mean, you have a question, boom, it's answered right away.
Oh, I mean, I can say, again, and I think I've spoken to from a support standpoint, Tyler has been hit and miss in the past as far as their support is concerned. It can be very frustrating. But so far as a part of this implementation, our phase 1 project manager was very responsive. And now we've just been assigned our implementation project manager. So she'll kind of take it. She gets the baton now and she'll take it from here. I have yet to speak with her, but I'm sure we'll be in good hands at that point. According to our stage 1 project manager, she said she's handing us off to somebody who's very knowledgeable. So
Okay.
I can absolutely, like I said, report back, but at this point, until we have that meeting with our new implementation person, we will have a better idea at that point, kind of what this timeline looks like and realistically how long it'll take for both the financial portion and then the HR and payroll portion.
Okay, we all
Mhm.
good? Any other questions, comments?
That's it.
Do we have any public comments online?
No public comment.
All right, thank you, Ms.
Thank you,
Kelly,
Kelly.
but stay there.
I'll just stay here.
Item 3F, discussion direction on the district's customer assistance program, the CAP program enrollment and policy.
Yes, so at last month's meeting in March, I did report on the current customer assistance program and some of the challenges that we were facing as far as enrollment was concerned. We had broached, I think, some ways or topics to explore as far as incentivizing customers to apply. Director Cicada and Director Underhill, you both made some recommendations on how we might be able to go back and consider applications from customers from accounts that maybe were not current at the time of application. And so what we did was staff looked pretty extensively at a number of other agencies and customer assistance programs that were being offered. Not only that, but getting in contact with neighboring agencies that we've worked with, namely ADCA and Resource Connection, to try to figure out how we might be able to revamp or kind of re-energize our own customer assistance program here for CCWD. And so that led to some proposed program policy changes, which is included in attachment A to this agenda item. And I didn't want to dive too deeply into the entire policy itself because there are still some very applicable aspects to the policy that I don't believe we need to, kind of redo at this point, but there are some specific sections of the policy that I felt needed an update. And so we kind of went through and proposed, what certain sections of the policy look like now currently versus, changes that we're proposing. And some of these are more related to just basic updates because some of the verbiage in the policy is specific to launching the program in 2019, and we're far beyond that. So
Yeah.
just kind of give it a
Will
little
you
bit
go
of a
over
refresher.
each one of your proposals?
Absolutely.
Is
If
that
you'd like
best
to
to
do
jump
that,
right into
sure.
that? I like that if you guys are okay.
Sure. So some of the changes that staff is proposing, specifically for section 21.2, which is program year, it speaks to the time frame of the program annually.
Yes.
Okay.
Bertha, about you.
But just
That one's a slam dunk. It should be
condenses and
fiscal year.
removes, it removes the part of the verbiage within this section that is specific to the program starting.
Yeah.
We're well into the life of the program, so it
Yeah,
just
I
kind of
think
cleans it
switching
up a
to a
little bit.
fiscal year is better, don't you?
It has run on a fiscal year. It's just removing, that's more of a cleanup item
Okay.
where it's initially talking about the program launching in 2019, and then in future years, it will run on the fiscal year. It has been running on the fiscal year since inception. So it just this is just a cleanup item.
Okay.
Section 21.4, which is eligibility requirements. Part of the conversation that we were having at the last finance committee involved, applications for our customer assistance program and what that looks like. So currently, it requires that the applicant can only apply for a credit for their permanent residence, which is pretty standard for all of the customer assistance programs that I saw, across many agencies.
Let me jump in there a second. So you're saying the homeowner can only do it for their permanent house. Now, what if they're renting and the renter is behind or?
Right. So that's also talked about here. So you can only apply for the credit if it's a permanent residence. However, if they're not the legal deeded property owner, the applicant, the renter goes through a different process.
So they're eligible to do it.
They are eligible, yes, but they
This
need.
still looks like legal verbiage to me. So if I just go right to the question, you
Right.
can just tell me without me having
No,
to read it
it
verbatim.
takes into account the fact that we understand there are property
Perfect.
owners that
Thank
have
you.
agreements with tenants.
Yeah.
And the tenants are required as a part of their agreement with the property owner to pay for the utilities.
Yeah, that would,
And so that takes that into account. But currently the program asks for a copy of the PG&E bill showing participation in the CARE program or documentation verifying that the household income is at or below 200% of the federal poverty guidelines. In reaching out to Resource Connection, who is specifically mentioned in our current policy as being an agency where customers can reach out and receive that documentation, the Resource Connection did clarify with me that they are only able to provide that for customers who are mutual customers of both the Resource Connection and CCWD. So for example, if somebody were to contact us and say, you know, I need this documentation, and we would refer them to the Resource Connection could not just do the research for them and give them that documentation. They would have to be receiving or a part of one of the assistant programs provided by the Resource Connection. So it would have to be a mutual customer of both agencies, which again is limiting.
Right. So how do you fix it?
So what staff is proposing is some changes to the requirements for submitting the application. So water bill must be in your name as the legal deeded owner. And then if not the legal deeded owner, you'll see in section 21.4.2 that there's more details for tenants and what they need to do, which is actually mirrors somewhat the way it is now with one small change. And I'll get to that in just a moment. It's basically clarifying that you must be a full-time resident at the address where the credit will be applied. So whether that's the tenant or the landlord, you must reapply each time you move within the jurisdiction. So that's something new, but that is something that I saw very commonly across the board with other agencies, that you don't automatically have that reissued to you if you move to another location. You do have to reapply because sometimes your status changes as a part of that move.
Well, that makes.
No, I
sense.
agree.
That
Yeah.
makes sense.
You send
Yeah.
out a notice saying, hey, your CAP program's going to expire.
Well, we
And
do
you
that, we do that annually. Yeah,
Perfect.
we
Okay.
do that annually. And that ultimately, if we move forward with this change, would be a part of the document that the customer completes, is that it will spell that out to them as well.
Okay. Sounds good.
And that you must renew your complete eligibility application annually. So we do have some folks who every year will complete the application itself, but then they do not send us a copy of the PG&E CARE
Yeah,
bill.
yeah.
And they go, oh, it's the same from last year.
No.
Doesn't matter. We do need the most recent bill. One of the changes that staff is proposing is that as a part of the documentation that is submitted, you can include a copy of your most recent PG&E bill showing participation in the CARE program,
That'll work.
or you can provide proof of enrollment in any of the following qualifying public assistance programs, and that includes LIHEAP, WIC, Medi-Cal, CalFresh, or SNAP, as they call it now, CalWorks, or SSI, SSP.
Perfect.
And so that will actually broaden the application pool quite a bit, because we do have customers who may not be PG&E participants. And we do have tenants in, occupying property owner residences that aren't responsible for paying for the PG&E bill. But this is a way that they can qualify using qualifying public assistance programs that they already belong to. The reason why these specifically were chosen is because these are the same public assistance programs that PG&E CARE grants access into their program for. So it's really pretty uniform.
So could we, and Michael, this will be you probably. So let's say that the income is $43,000.
Mhm.
And then to get any of these programs that would make them eligible, but somebody makes $43,500. So they're off by $500 a year, which can be very difficult. It's not that much difference, but it doesn't allow you to be in any of these programs. could we do something, Michael, that we could say, if somebody isn't qualified for one of these, we could look at it on a board level and approve it within a certain thing, or are we stepping?
We have tried all
No,
along to
yeah.
avoid being in the income verification business, so that's why.
Oh, yeah, because we'd have to verify it.
Then we would have to verify.
Gotcha,
this
okay.
income level. What I also anticipate is by doing this, and this is really great work. Thank you guys for being so responsive to this and looking at other ways to do it. By doing this, I think hopefully the program will
We get
fully
full.
subscribed again, even at that level.
Right,
Yeah.
right.
Have our numbers gone up?
Well, not
Actually,
yet.
we are right now, right in the thick of renewals.
Mhm.
And I did speak with staff and customer service, and we have quite a few.
Nice.
Oh,
So-
great.
so,
Oh.
You know, I should be able to, hopefully at the next finance committee, hopefully not, it doesn't have to wait till the one after that, but I'd like to be able to report on enrollment for CAP at that point.
Mhm.
But because we're just right in the thick of it right now, we literally have mail coming in every day in droves.
Well, that's
for
great to hear.
re-enrollments
Yeah.
and, or renewals and enrollments.
So your outreach works.
It's working.
Yes,
Yeah.
it's
Yeah.
working.
Mhm.
So,
Thank
and,
you,
and,
Kelly's.
yeah, and when we're going through renewal, obviously, we do send out
Good.
the notifications, you know, and the renewal forms. And so we're getting a pretty robust response,
Mhm.
which is great.
So far, I like everything that you said. The only thing that I'm hawing about on the initial applying for the program 90 days, I agree with 21.7 that you can't be 90 days behind,
Mhm.
you know, because you've been on the program, so you should be current, in my opinion. But the initial 90 days, you know, I'm assuming, and we know what that means, that people got this way because the state wouldn't allow us to lock off and all that kind of stuff. So I'm wondering, can that be adjusted, or do we feel like people are pulled out of that? And, you know, I'm just wondering if we should, for the initial 6 months, you know, to help people get on their feet, or is that, anyhow, that's kind of where I'm leaning for the initial. I'd like to see it longer, but I want to kind of know your thoughts as where our customers are that need it.
So I'd like to actually elaborate a little bit further on the 90-day delinquent
Okay.
portion of this,
Okay.
because what I'm finding within the way that Tyler has us built out in the system, 90 days actually equates to 3 billing cycles, which ends up being 6
6
months.
Oh, okay.
So we're talking half of a calendar year
Can-
worth of,
Can you do me a
Delinquency.
favor and
Mhm.
make that say pretty much what you said? Because
Right.
you're here now, you get that, but what if somebody else comes in and says, nope, 90 days is 90 days?
Yeah.
You know what I mean? Just some clarity in that. And that
Sure,
makes sense. It
90
is 6
days
months.
means.
Yeah,
yeah,
90 days from however you word
Uh-huh,
it, but just
Well,
like what you said.
I will add the disclaimer that the 90 days versus 3 billing cycles determination was actually found between the time that this was sent out and made public to the time that we're reporting on it today.
Perhaps it should say you can't be more delinquent than 3 billing cycles. That
Right.
might simple it up.
Right, absolutely.
Okay.
And so really, and just, you know, we caution from a perspective of, you know, not wanting to, you know, we wanted to accommodate as many people as possible, but we also would like to see, you know, some sort of investment
Well-
from the customer. And I understand
Right.
times are tough. But this to me is like the maximum at this
No,
point.
I
we would
agree.
wanna go.
I agree. You kind of put it to what it was, what I was asking.
Right.
And then when you go down to 21.7,
Mhm.
see, I think that should be a real 90 days. So that should have some clarity. And then
Okay.
my other question is, so somebody's 3 billing cycles behind, they owe, let's say, $900. We're going to give them $30 a month going forward. What's the game plan for them to get caught up? I mean,
So-
I don't know, I'm not saying that's our
Well,
responsibility.
that's,
Right.
But
that shouldn't be up to us.
I didn't say it was,
no.
but what I'm saying is, how do they get caught up? So they're, when it come to renew, have they caught up, or they're still carrying a behind balance?
Mhm.
Is there something that you can say that says the past due balance has to be paid in full within a year or something like that?
Well, we
For
would
the
have to,
renewal
we
or
would have
something?
to take that into account as well, because that's a huge reason why a lot of customer assistance programs upon initial application ask
They-
that your account is in good standing, because they
Yeah, I
want you
can
to
see that.
start from a clean slate.
Right.
And then if you start to, deter from that, that's the mechanism which unfortunately causes removal from the program. Whereas if we're starting already in delinquency, it's a little bit, we would probably have to have some sort of agreement in there that states, whatever your balance is at the time of application is satisfied within a certain
Within a
period of
certain,
time.
at least that way they can get on there and like, I mean, you just can't keep carrying a behind balance.
Well-
Maybe there's a referral to a church or something to
Right.
do that. That shouldn't be our responsibility, but I
Right.
just, this is supposed to somehow help them feel good about staying ahead of it. So
Right.
if we don't somehow mention that you can't carry a past due balance for X amount of time, whatever that is, maybe it should only be 3 billing cycles. And then if they're still carrying it within 3 billing cycles, then they might get kicked off. But it would encourage them to somehow pay extra, go reach out for help or whatever it is. I mean, I don't know how you guys
Right.
feel about that, but I think it should be addressed some way. I don't.
Right. And that's an additional tracking mechanism that would ultimately become a part of the program. Whereas we, don't necessarily have, or we haven't necessarily been tracking it now because we have not been moving forward with any of the delinquency process until recently.
Right.
So a lot of the folks or the customers who have enrolled in CAP have been able to stay on CAP even though their account has been delinquent. But in order to open it up for other people who are also eligible that may be willing to pay those delinquent balances within a certain period of time and really want to reap the rewards of the program,
Right.
we need to have some sort of
Yeah.
parameter set that
And
makes
on
sense.
the application, you need to make sure they read that and acknowledge that if you don't have it paid in whatever
Right.
time that's agreed upon,
Right,
then you're kicked off.
correct. And
Let
right.
them have skin in the game to get it together and stay current.
Right. And so again, just from staff time, that would be something that we would need to incorporate into the program as a part of the staff's time that it takes to.
What
run
do
the
you guys
program.
think it should be on carrying something? What's your thought of how long they could carry it?
Well, I can tell you that, we are in a situation now, as are most agencies, with, amplified delinquencies stemming from COVID. And so a lot of agencies, even the agencies I came from, we were pretty strict on delinquencies. We had very strict timelines and you had to pay by certain dates and there were fees that were assessed or you were locked off. This situation that we're operating in now, where we don't have, or we're not currently using lockoffs as a mechanism to, engage customers to pay, is forcing us to re-look at, the structure for programs like this. And so it's kind of uncharted territory as far as timelines are concerned, because really, I can tell you from the standpoint of an accounts receivable specialist, you want that money in the shortest amount of time possible.
Oh, absolutely.
But we're having to kind of make a switch in our brains these days as far as that timeline is concerned. And so I don't necessarily think that 3 billing cycles is going to, make or break. Anything past that, I would not recommend. So I would say, a 6-month period of time might be good.
And
Under
that
SB
is a real stretch.
It
Think
is.
of it. Think of it.
SB 998, which is, something that we operate under, just like every other, special district, water agency, says that, you should be able to give payment arrangements under that, only if you're moving towards, disconnection for non-payment of up to a year. That does not give me, any kind of confidence, especially in our
I
current
think staying
climate.
at that 90 day/6 month is good to start, but I'm
Right.
wondering for the customers that are currently on the CAP program, how many of them have a running balance that they're carrying and how much is that? Maybe at some point we could look at that and say, okay, we need to revise something, some way, somehow, I don't know how.
Right.
But maybe start with the 90 days, like you said, and then revisit it in 90 days. 90 billing or three
Right.
billing cycles, whatever. Yeah.
Well, and definitely. So we can do that. That's not a problem.
Okay.
So I've taken some notes there on that. Some of the other changes involve, existing, sections of the policy and, just changes as it relates to income eligibility, which we're
Yeah.
trying to back away from because again, the staff time and investigation into that is pretty intense. What is required with the application? So again, changing it from going to the resource connection for income verification to us referring customers not only to PG&E to see if they qualify for the CARE program, but also referring them to Resource Connection and ADCA to see if they qualify for any of their programs, which would then in turn ultimately make them qualified for our program. So we're going to be working very closely with Resource Connection. I've reached out to some staff there. We do have a contact with ADCA that we've been working with through the LIWAP.
Bertha, do you want me to take a recess or you want us to keep going? Yes?
Yeah.
Okay, can we pull a quick little recess?
Sure.
Few minutes, 5 minutes. Yeah, so those online, we're gonna take a quick 5-minute recess. Okay, are we on? All right, we're back from recess. So we're on item 3E. No, we're on 3F. And we're at what, 21.8? That sound good?
Yes,
We cover,
we've kind of moved through and some
Yeah.
of this is just updating, like I said, to, the changes in application from Just Care program to these other qualified assistance programs. And then also just making sure that we are establishing an updated change in eligibility status
Yeah.
requirement from the customer.
I am totally pleased. You guys did an excellent job. I know a lot of work went into that. Thank you. And I think it's going to be really beneficial. Just add that permanent that we talked about before we went to recess.
Right.
And I'm good to move it forward. What about you, Bertha?
That's
Okay.
fine.
All right.
I
move it
just have a
forward.
question.
Right.
You've been talking to other agencies and we're getting our policy in sync with them. Are you finding anything that they have done that we haven't thought about?
It's very interesting to me because I've been in water now for a little over 10 years at 3 different agencies. And I've looked at customer assistance programs during that entire time across the state. And really, we have to stay within California as a comparison because we're under Prop 218. We're governed a little more strictly as far as assistance programs are concerned. So it doesn't make sense to look elsewhere. But I can tell you that a lot of the customer assistance programs across the state are very similar.
Nice.
And, again, some of them have had to make changes over the years as it relates to changes to Prop 218 and what's allowable. But, a lot of the larger agencies, more urban agencies that have larger staff are able to offer a bigger program. And so.
Oh, of course. Yeah.
And so
Yeah.
taking that into account and really what's feasible and manageable for CCWD staff while also accommodating as many customers as possible. I think these proposed changes are going to accomplish that, but we should always be looking for ways to improve these programs,
Nice.
as we move forward. So that will be, I think, an annual commitment, for us to do that.
Okay, well, let's move on.
Mhm.
Let's go to no online public comment.
No.
Thank you. All right, moving on to item 3G, past due delinquency process update.
Okay, this is my last one.
And can you put this on for others? Or I guess whoever's on there already have one or something.
Oh, well, the delinquency process, so this discontinuation of service due to non-payment process was actually originally presented in March of 2023 to Finance Committee and I believe it was also presented in the External Relations Committee because we had kicked it off around that time. And so we were kind of doing some duplicative efforts across committees. But unfortunately, Michael and Kylie don't have this electronically. But we can include it as a part of the minutes that
yeah.
go out.
And this is your recommendation.
Well, this is actually just sharing because Director Underhill had requested a timeline or associated process
Okay.
for delinquencies as it relates to our rules and regs right now.
Okay.
And so this is how it stands right now. We are obviously implementing past due notices. So just that first initial part of the delinquency process we initiated as of January 2024, where we started tracking again kind of what our delinquencies look like. And depending on how we were trending with the past due notices stage was really going to, I think, help us determine what the best situation is going to be moving forward as far as how we handle our delinquency process for district wide as we go forward, because the way we used to pre-COVID was move through the entire delinquency process on a monthly basis, where we went to shutoffs, discontinuation of service for non-payment. As we reported, COVID, because there was a moratorium on shutoffs for that period of time through the state, forced agencies to reevaluate how they were getting folks to pay their bill and other mechanisms that could be utilized in order to have, revenue coming in and, and reduce your delinquencies without having to utilize a discontinuation of service and locking off the meter. So agencies move forward with things like Qtr agreements with the county and, collection agencies, utilizing collection agencies even for active accounts. If you had gone so far delinquent that you would, a portion of your active account would be written off in the system, but sent to a collection agency. So agencies had to get creative because they still needed the revenue coming in for operating
Do you
expenses.
send customers who are not current in arrears, but they're current customers? Do you send those customers collection and keep billing them?
No,
No.
we don't currently
We only do
that.
collections for people that have moved and it's unpaid.
Right.
Okay.
We only do active account collection activity once a year to the Qtr with the county.
Gotcha. Right.
For inactive accounts or accounts that have closed because they've changed hands, property ownership has changed.
Mhm.
At that point, if there's an outstanding balance, they get
Then
sent to
it goes.
collection agency.
Gotcha. Okay.
So a little bit different process depending on the status of the account. But I did just want to bring and present this delinquency process back to the committee at Director Underhill's request. It had been a while since it had been presented. We've been talking about this for some time, but we did create this a while ago just to show the process and kind of what under our rules and regulations we do now, or can do. Obviously, stemming from COVID, we have not been doing any of this, but we did propose that we would like to move forward with the past due or reminder notices and see kind of reevaluate where we are at that point to determine whether or not we need to keep moving forward with the delinquency process as a whole, or we can modify our Article 3 rules and regs to change the process. But that takes me to the past due scenarios sheet that I did provide you, which will also be included in the minutes. And I did just want to report on where we're standing as far as re-implementation of the past due scenario to let you know that, we are showing an upward trend. And I did not compare this to years past because I'd have to go back into Springbrook and pull all of this. And I can, if you'd like me to, I certainly can. But I can tell you just from a standpoint of, percentage wise, our percentages of past due AR is pretty high.
Pretty significant.
Yeah, it's pretty high. And so I was hoping for something lower than this. So that, at least, staff could ultimately recommend, making some modifications or eliminating part of the delinquency process. But I, at this point, would like to recommend, obviously, that we keep moving forward with these past due notifications and applying the past due or reminder fee, which, as we stated at the last meeting, is simply to just cover the cost of running the process. It's not any kind of, it doesn't provide any additional
On this
revenue to
percentage
us.
sheet, so
Mhm.
the first, after the accounts billed, I'm looking at, that's at the due date. That's how many, that's how much is owed.
So when we're, yes,
So then the next one over, that's at the percent that's as of the due date. And then what's the last two columns? What date or whatever?
So I'll explain. In January, we billed out cycle 1, which is Wallace, Copperopolis, Valley Springs, and West Point, Wilseyville area. We generated a little over $2.1 million worth of receivables for that billing. And we billed out a little over 7,300 customers. At the time that we would be issuing a past due notification, which is the day after the due date, we had a little over $668,000 still outstanding from that original 2.1 million that was billed, which equates to 31% of the original amount
Gotcha.
billed still outstanding. the number of accounts with open AR at that point with the 668,000 was 2,389, which is about 32% of the number of original accounts billed.
So all this is focused really on that, the day after the due date.
Correct.
Gotcha.
Which is typically when we would look at, assessing the
Okay.
past due process. So ultimately, what I can tell you is I'm happy to look further into any kind of industry benchmarks as far as delinquencies are concerned and what agencies like ours look at as far as a delinquency threshold is concerned. What is ideal for the amount of delinquency that you have after issuing a bill. I can do that. But really, I think what we'd like to do at this time is take the next steps to make sure that this past due fee that we're assessing as a part of this process is sufficient to cover the process and makes sense. And then hopefully as we move forward with the fee, that might reinvigorate customers to pay.
Are you going to move forward with lockoffs too? Is that what you want to do?
Well, that's what we're trying to figure out at this
Okay.
point, is whether or not that's necessary based on the amount of delinquency that we have. If it was low enough, I really don't think that it merits moving that direction. And then ultimately what we're hearing from the state is that there's so many legislative, initiatives that are being put forward to just eliminate the ability to disconnect for non-payment entirely. So we're trying to be one step ahead of that, and really come up with a process that will work prior to that being implemented and us having to scramble to come up with an alternative. But, really at this point, with the committee's recommendation, I'd like to continue monitoring this, running past dues, sending them
Yeah.
out, assessing the fees
And-
that are
and let's
associated with
see
that.
Let's see what impact
Right,
Yeah.
that.
And
I'd like
then
that
be
made.
looking at these percentages of your AR again,
right.
and see if it's
Mhm.
going down. And if it is, then we know going forward is good. So move forward with the notices, but not yet the lockoff.
Yeah,
Correct.
okay.
Okay.
Right,
Let's-
because really what we're trying to do is evaluate the need for the
Yeah.
rest of the delinquency process, which would include payment plans, door tags, phone calls, there's a lot that goes, a lot of staff time, both in office and out in the field. So we're
On-
really trying to gauge
On the
that.
fees for a field disconnection or reconnection, $50 fee, is that the normal rate out there?
So under
other
SB 998, that is the maximum that you can
Okay.
charge up to for reconnection
Okay.
and just, and agencies are asked to do a fee study because if the cost does not reach 50, they ask that you don't charge 50. Well, you're not supposed to. You're supposed to charge the actual, but that is the cap under SB 998. You cannot charge more than that. There were agencies, and I worked for several that charged a lot more than that before SB 998.
And even before lockoffs, you're giving payment arrangements. So,
Under SB 998, we're required to, yes.
okay.
So
I think this is
the-
good.
the payment arrangements we have not been doing because we have not been locking people off, so they haven't been necessary. But if the amount of delinquency that we're having at this time, because we're not moving forward with a part of the delinquency process, is affecting our cash flow, we need to reevaluate how we're doing delinquencies. But I would just like to recommend at this point that we continue to monitor and move forward with our past due notices, assessing the fees regarding the past due notices, and then I'd be happy to report back.
Yep, I'll bring in, now that you've told me how this is, that makes sense to your
Okay.
report.
Mhm.
I would recommend it moving forward like
Oh,
you suggested.
absolutely.
Okay.
So,
One of the things that I'm thinking as we're talking, let's just talk about the state of late charges as far as the water district is concerned. Our customer now is thinking, and the mindset has probably come in, this is not terrible. I
Right.
mean, it used to be terrible. It
Right.
used to be terrible before COVID.
Right. And really, it has been a little a little surreal for me, having done this for so many years, that we don't have a definitive mechanism to get
Mhm.
people to pay,
Mhm.
and that you're really having to be creative
Uh-huh.
because we have to find that balance between understanding that people are in a much different socioeconomic and financial situation now coming out of COVID than they were prior to COVID. But that we still have an operation, we still have expenses, we
Mhm.
still need to have that
Absolutely.
revenue coming in. So it kind of puts you in this interesting situation where you're having to explore
Mhm.
so many different options. And I think that's where the talking to other agencies and seeing large and small, seeing what has been done to
Right.
try to just maintain is going to be huge for us to continue to do moving forward.
Well, I think that report that you put with it will be nice if you can bring that,
Absolutely.
you
I'm
know,
happy to
every
do
other
that.
month or whatever works with the billing cycle that you
Okay.
can print one of those. I think I'd like to see it.
Yeah, and no,
Great.
no, this is very good.
Yeah.
This is, you know, this
Well, and I,
puts it into perspective for us.
and I,
Well, I
I
wanted
want to
to
keep
see-
it simple because sometimes this can get very complicated. And so if the
This
way
is
that
fine.
it's structured
I
here
wanted to
works,
see the 90 days with the number of customers because
which I'm happy to do as well.
But I wanted that for the CAP program.
Oh,
And now
okay.
we've resolved the CAP program. This one will be fine if you're going to keep bringing, you know, how we're improving
Mhm.
with the notices, you
Right.
know, so.
Happy to
I'm
do
good.
that.
Yeah.
All right. Thank
Great.
you. Thank
Thank
you very
you.
much. And
Oh,
I
yeah,
like this.
this
I'm
is-
going to hole punch it and keep it with me.
Great.
Yeah.
It's helpful for me because I don't remember some of those things.
Okay.
Okay. Day
Okay.
16.
This
Oh,
is
now we're
great.
going to bill.
No,
and-
thank
Good,
you.
great.
This is
We'll include that
exactly-
moving
yeah,
forward.
yeah.
Okay, thank you.
All right. You're welcome. And I guess you can go sit down.
Thank you.
Thanks, Kelly. And there was no online public comments, correct?
No.
Thank you. All right, let's move on. Director of Administrative Services comments. Jeff, you're on.
Jeff, you're muted.
Oh, that was a nice report. Thank you. Next.
Whoops, I hit,
There you
forgot
are.
to mute. There you go. You probably wanted me to be muted anyway. You, earlier this meeting, you asked me about the status of our budget development. And we're working with Bailey. They're compiling all the departmental budget requests, pulling it all together. And it's our goal to bring the draft budget to your finance committee on a special meeting on May 10th. And
ahead.
that would be a Friday.
Let me look.
Yeah.
May 10th.
Yes,
I'm
ma'am.
okay. I'm okay. Or you?
Okay.
And the
Budget
budget
only. I
right.
like that.
Yes.
Yeah.
It's a draft budget for review.
Focus specifically on the budget.
And what
that
time
day.
do we want to meet? Can we meet a little bit earlier, like maybe before lunch or something, 10 o'clock or something? Or
I have 10 to noon that day.
all right, so 1 o'clock. What do you want to
We
do?
could do 8 to 10.
Kelly, look at you.
Yeah, we do early.
And I'm retired. Well, it might be frozen out there still to drive. No, if we had to, we could. Could you do that, Bertha? Sometimes I'd rather just get on it and be done with it. It's Friday.
Well, okay, but let's talk about the extent of how long is it gonna take us?
4 hours, 9 to 12. Michael has a meeting
Yeah.
at 12. Is that right? You
Since
said?
when?
I have
It's
a 10,
9 to
12.
12, 4
Oh,
hours.
No,
so
no.
2 hours. Sorry, I was thinking he was doing it at 12.
I mean, it's probably an hour, Jeff. I don't know. I mean, honestly, it depends on the committee member.
Oh, really?
How
It's
much
not?
time you
Then why
wanna
don't we
spend-
shoot for 9? And when's
how
your
much
other
time do you
meeting?
wanna spend
10.
Going through it. Yeah, it'd be up to you. guys.
Well, truly, I would love for you to give it to me and let me spend some time at home looking at it before we even meet in person. Maybe we wouldn't have to have the meeting. If you could give it to us, you know, a couple weeks before our regular meeting, maybe
Well,
we
that,
don't need
you know,
the
that,
special
think
meeting.
about the strain that's gonna put on the.
But if they're gonna have it ready on the
department
10th,
heads.
but if you were planning on a meeting on the 10th, you're gonna have it ready on the 10th, send it to us on the 10th, and we won't meet to discuss till the 21st.
So the idea was
Was-
if we.
Oh, I see what's happening.
The 21st is the day before the board meeting.
Right.
Um, So what we could do maybe is because I know that is a time crunch
Okay.
for our staff and for.
here's a recommendation.
Okay.
Do a
wait a second.
special-
Wait, let's hear what he.
Well, because I know where they're going. It's May and you're gonna want approval in June.
Well, hold on. So what I was gonna say is though, why don't we try to get the agenda packet out on the 10th instead of having the meeting on the 10th and then schedule a special meeting for the following week. So
Okay.
that we're not doing it the day before the board meeting. I'd rather have time to review it with this committee and have time to
Okay.
make changes.
Okay, now
That
here's the situation. However, you have the, will that interfere with the spring conference?
No, that's
The-
that
yeah.
week. So we could do Tuesday, the 14th, do
Okay.
our finance committee meeting on the 14th instead of the 21st. I don't know if we'll have the month.
I
end.
could do that, but it'd
Okay.
have to, I'd have to make sure I'm out of here at a decent time. I got plans that late afternoon evening.
Okay, so we could do like a 1 o'clock normal. Or we could
1
start-
o'clock would still be
Yeah.
okay.
Okay, do a normal finance committee routine that includes budget review, Jeff, on the 14th. That
Yeah.
gives us a few extra days, but let's definitely try to get the packet out.
On the
you know,
10th?
No later than the 10th, if possible,
Yeah.
even, a day earlier
Yeah.
to try to give the committee members time to take a look at the budget.
Okay,
So here's a couple of things I want to throw out though. So in our rate increase, we said that every year the board gets to determine if we're going to make that next step, right? So where's that discussion? And also, have you used the model from the rate study at all to see where we're at? When is that going to happen? I'm really curious about those
So I
and
think
seeing some of the results,
once we dive into the budget for the upcoming fiscal year, we'll see where we're at in terms of revenue projections and whether we're meeting the needs or not based on that. Because the assumption in the budget will be the next rate increase going into effect on July 1st.
So, but again, we talked about that, the rate study, and
Yes.
you know that I'm focusing on those things. So
Right, so we'll.
I
evaluate
want to,
the budget.
before we approve the budget, I want to know how we are on projections income, because maybe instead of saying, well, here's the budget that we must have, so we have to increase, approve that. Or can we say, here's the budget we have, and before approving this budget, if we see that we have to increase it and it's whatever, we could go back and say, well, maybe we're not going to buy a new truck this year, or whatever, you know what I'm saying? And whittle away some things instead of just saying, this is it. That's what I would like to see. So at what
Well,
point do we
and-
get to
and
do that?
along the
That's-
same lines, we could think of
So
the
in the budget,
percent, the increase,
yeah,
the
so in the
percentage.
budget, you will assume that we're going to have that increase in there.
Right, so we will assume the full rate increase on July 1st.
What if-
If there are, if there were opportunities to, and then look at where the projections and whether
Right.
that's meeting the needs, and if not,
Could
or
we-
if it's more than what we need.
Well, see,
then
I'm
have that
wondering,
opportunity
why
to do
couldn't
it.
we try and do it a different way? Meaning, let's use the income based on just this current increase and see where we land. And, instead of, we're going to assume we're getting the money, because it's going to be a lot easier to say, here's the money that we have based on the increase, and here's how we can spend it. We can always spend it. There's always a need out there. If we did it the other way, based on the income from the current increase we're at, you can say, we're going to have a shortfall, and we could look and say, is there anything we can take out? No. Okay. You know what I mean? And I would like to see that shortfall. And if we do the income increase, I think that just gives a better look of, we're not trying to increase all the time. And I'm certain it's going to increase. But what if we did that? I mean, we're talking about changing the income numbers to start with our current, like that's what we're going to try and do, folks. And then as we go down, man, we just
Well,
can't. And
yeah.
then we put, and then we add then we'll say, yeah, we have to approve it and put it in there. Is that possible?
But
What does
this
that do
is-
for staff?
This is what Michael and the department heads are doing all the time. They're not, just
Yeah.
assuming that we have
Mhm.
that money. They're
Okay,
looking.
but I just asked the question. They're going to put the rate increase that was approved, even though every year we get to approve it, you're going to use those numbers. Isn't that what I heard you say?
So that would be included in the revenue projection. We'll
Correct.
always, on the expenditure side,
Mhm.
we'll go through.
Absolutely.
And
But-
make sure we're being as efficient as.
Could we do it the other way? I know it's not the norm perhaps, but because this was a pretty contentious increase for whatever reasons. What if we did it? Okay, we're going to try and not use that, increase, and let's see the shortfall right off the get-go. And I know you're supposed to have a balanced budget, but this is just our preliminary walkthrough for the board. I know you folks are doing it and I appreciate it. You're doing great. But sometimes we as a board have to sometimes ask those hard questions, right? So if we see the income, we're currently based on the rate today, this fiscal year, but for the whole year, right? So our increase was whatever it was, but for the whole year, this fiscal year, we only got it for X amount. We were shy at
We
3
can
months.
add, we can.
So
include-
use that, use
Sure.
the numbers for the current and show us the shortfall at the bottom line.
Sure.
And then we could go through it. And is there anything we can pick out? No. Okay, then we're gonna, because I believe that, I don't remember what the approval percentage was, but maybe after we do that exercise, we can say, shoot, we approved 18, maybe we only need to do 12 or something. Just
Well,
to show,
absolutely.
Yeah.
I'm
Absolutely.
asking
This
him
is
and
something that,
just
yeah,
to show that, folks, we don't want to take your money. Well, we do, but we
historically,
don't, you know what I mean?
yeah, historically, that is what the process has been. We don't have to. do
Well, you know what, maybe they were, but we did just have this rate increase.
that. Okay.
When the 1 year that you voted no on not doing the rate increase, did you put the rate increase income in there or did you not? But what did you use?
We did not, that was before my time, but the board.
Yeah,
did-
mine too.
The board did
I
that for
can-
multiple years, but we can look at what the revenue projection would be without a rate increase and with the rate increase.
Yeah, I would like to start, and don't call it a draft because, well, it is a draft, but you know how you're supposed to have everything balanced, right? At the end, you're not supposed to have a shortfall or a income based on your projections, but I just think it might be something different to do and to really, is somehow, I believe that somehow, I'm not saying that we don't do this, but if we did it this way, I think it would show in black and white quicker and easier than somebody saying, or me coming up with, okay, so what if we didn't do it? What if we, didn't do the revenue? What are the numbers? And even though we've kind of plugged everything in nicely, Jeff, what are your thoughts on having to potentially, do either 2 sets or start with the, what? Okay.
Sure.
Everybody know what I'm saying?
Yes,
Yes,
it would
I
just
do.
be on the water rate revenue projection, Jeff. We can just run the scenario of no rate increase and run it with the rate increase, and then we'll compare that against our preliminary budget for expenditures.
Yeah, because it's preliminary.
And one
I
of the
think-
challenges we're gonna face is, since the rate increase wasn't put in effect until fall, we really don't have good consumption numbers and data on what the revenues would look like. But so on the consumptive side, it'll be a bit more of a challenge because we don't know if the higher rates are gonna cause people to use less water. So that's something that we'll have to look at, but we can certainly look at a base budget with the current rates and then see where we stand overall before we looking at it with the rate increase.
Have you noticed a lower consumption since we did the increase?
We're in the winter time, so it's a lot of the water usage is outdoor usage. So it's really difficult to project if the rate
Yeah.
increase has
Yeah.
changed our consumption, our customers' consumption, because we had another wet winter.
Yeah.
Right.
But with that being said, so a customer, for their lawn, they have to do treated water on their lawns. This is a whole nother question.
Yes.
Wow,
Yes.
that's too bad.
I
mean, it has to be.
We
treated
also have,
right,
it'll
but-
be interesting, going forward, it'll be hard to be precise about whether changes in consumption that we're seeing are related to specifically to the rate, because that's not the only variable that
True.
changed last year,
True.
right? We have different metering technology, we have other factors that came into play, so.
Well, you know,
Because one of the things that we have to, keep in the back of our mind is what the state is telling us. Remember, they're gearing us for this, what's the terminology for
The water use efficiency standard?
yeah, so that, so that's another issue.
so, I think that would be great, at least for the first initial, see where we're at. And then obviously that's going to tell us one way or the other, which way we're going, then bring it back again.
Yeah, I
But,
think the other, well, yeah, we'll bring that back.
And then, have you used the model at all in your preparations so far to see what's going on, or is it even,
Yes,
do
yes,
you
we
even
have.
need to right now?
It's Director Cicada. We have been using the model comparison, but right now, with Bailey just compiling the data from all the departments, we have to wait till that process is done to compare it to the overall rate model.
Okay.
So it's an iterative process,
Okay. Thank you.
certainly. And I just have one more item.
Mhm.
Back, and I know I'm going to force you to go back in memory. Last December, I came to your board with an item on how to invest our CIP loan proceeds
Right.
due to arbitrage rules. In my absence, it's kind of been put on hold, but I plan on going to the full board next week to be able to have authorization to work with U.S. Bank to transfer our money from Chandler into U.S. Bank and invest in demand deposit state and local government series, or known as slugs. So that eliminates our arbitrage tax payments that we'll have to pay to the IRS.
I
So
like
that's
it.
going to be going next week.
Awesome. Thank you.
And that's
Thank
all
you.
I have.
Save money. We like it. Make money. Awesome. Thanks, Jeff. All right. General manager's comments.
Just super grateful to staff for all the hard work that went into the agenda packet and the presentations today. Really, really good stuff. But other than that, I will, we'll be back here next week, so.
Thank you.
My comments.
All right. Thank you. Bertha.
Okay,
comments.
pretty quiet, very quiet. And tomorrow I have the IR Wimpy.
Okay.
And so,
I'm going to
you'll
be,
find the status of what's going on.
I'm just going to briefly talk the IRWM. Carolyn sent me an email. I'm not sure if you got it. And the IRWM likes to do field trips.
Mhm.
Sometimes you'll go to a place that just didn't upgrade or something. Well, we talked about going out to the plant in West Point, the biochar, what's it really called?
The biomass power.
Biomass power plant.
Site. It's not
Yeah.
a plant yet. It's
Site, yeah. Anyhow, she sent the email to me and I'm going to forward it to you and Michael to talk about, but since you're going tomorrow, maybe you guys can talk about, you and Bertha, Michael can talk about it if something that you want to do for some kind of a field trip. They're planning for their next year's agenda of their meetings and stuff. I'll forward you the email.
Okay,
And you too. All right, was there anything else? Sorry.
no.
Okay.
Oh, okay, well, wait a second. We had, White Pines,
yeah. White Pines Park Committee?
yeah. We have the big car show on July the 20th.
Hmm.
And Kelly can talk about
Next meeting. Car show.
no. What
Yeah,
happened at
Kelly.
White Pines? He just covered.
All
Yeah,
right, what is it?
uh-huh. Yeah, uh-huh. Please.
Hi,
Well,
Kelly.
Hi, they're getting a new tractor. That was pretty cool. I think they're
Was
gonna
that
get a
it?
tractor with a thumb,
Who's
Um,
getting the tractor?
the park committee. So I think that's a big deal for them. They, of course, they do a lot of great work on the grounds there. So a lot of retired folks who put in a lot of extra time, I think.
Volunteers?
Yeah,
Wow.
and it was-
How'd they get the tractor?
well, they have
Donations.
donations and memberships, and I was also really impressed with how much they're bringing in through memberships. So it's really great that the community stands behind this park, and it was a great little meeting last night, and yeah, very inspirational, and got to do a plug for the not the Waterwise, but the Firewise event coming up on May the 4th up at Independence Hall. So
Very cool.
I think that's a good thing.
They do a mailing for membership and they got almost $10,000
Wow.
from membership.
Yeah, I think they sent out about 500 letters,
Mhm.
got about 150 back in, and was able to raise
$9,000, $9,700.
What's the membership fee?
Yeah.
What's the membership fee?
Is it a fee or is it just falling? Is it?
Oh,
No,
donate.
You can
Whatever
go the,
amount.
oh no, that's the big trees. No, $25
Yeah.
is a,
No,
I'm not
Good.
sure.
uh-huh.
But yeah, it was a great
very
meeting.
cool. Thanks,
Mhm.
Kelly.
Mhm.
Okay, I don't really have anything to report on CCWD, but you guys did a really good job over there.
Mhm.
No mess ups or anything like that for
Yeah.
equipment, because sometimes the equipment's challenging, you know. And Jeff, you too, and of course you as well. So thank you, everybody. It was a nice meeting. Kelly's. Yeah, no, I just wanted to let the newcomers, you guys did a great job. Thank you. All right, so the next committee meeting is going to be when? We're not sure.
No, May the 14th,
May 14th. Oh. What day of the week is that?
Tuesday. The second.
Okay, that's
Tuesday.
what we talked about. So yeah. Okay, so May 14th.
Yeah.
Yeah.
21st. Yeah.
All right, if nothing else, thank you, everybody. Meeting's adjourned.
All right.
Thank
Thank
you.
you.
Mhm. Okay, bye, Jeff.